70%. That's the percentage of Filipino adults the Bangko Sentral ng Pilipinas, or the BSP, wants to onboard onto the financial system by 2023. 50%. That's the percentage of payments the BSP wants to convert into digital by the same year. I'm Patricia Mirasol, and I report for Business World. Join us for the next hour or so as we tackle the challenges and opportunities of the fintech sector in the Philippine market together with our invited panel of experts. Allow me to introduce our speakers now. Our first speaker is Ms. Jovelyn M. Howe. With over a decade of experience in technology risk supervision, Jovelyn Jovi M. Howe brings in key insights and valuable inputs as she leads the Fintech Innovation and Policy Research Group of the BSP under the Technology Risk and Innovation Supervision Department. She is likewise heavily involved in various policy initiatives of the BSP, like the recently issued amendments to the regulations on outsourcing, as well as ongoing initiatives on the Open Finance Framework and Regulatory Sandbox Framework. Good morning, Ms. Howe.
Good morning, Patricia, and good morning, everyone watching. And I'm happy to be here.
Would you like to share your opening statement?
Yeah, sure. So, good morning, everyone. I'm very honored to be here with you, and thank you, of course, to the organizers of this event, Business World, for inviting the BSP and, of course, giving us this opportunity in sharing the latest in terms of the regulatory approach of the BSP when it comes to fintech. So, in the past couple of years, before the pandemic and especially during the pandemic, so much has happened, especially in the digital financial landscape. And there have been unfortunate events. We all know that, but we've also seen so many opportunities happening during those periods and up until now. And we would want to continue to leverage on the gains of what the pandemic has actually pushed forward in terms of digitalization in the country. So for the BSP, we've been having this approach as being supportive regulators for innovation and emerging technologies because we see the value in these technologies, especially towards our goal of financial inclusion in the country. So we've seen how these innovative financial services can really help in terms of the underserved and the unbanked market segment in the country in terms of providing services, financial products and services that are really designed to help these market segments in the country. And as we, push forward through our recovery efforts, the BSP will really provide an enabling regulatory environment through, of course, the issuance of our regulations that are supportive towards the achievement of financial inclusion. So, a number of these regulations that have been recently issued by the BSP include those that promote open finance in the country. So, if you can provide like a few minutes of indulge in this sharing of mine in terms of the open finance, because we're really seeing this open finance using open API in terms of really delivering seamless and secure financial services that would really help our countrymen, in terms of having a customized and financial services that are really catering to their needs and very specific to their needs. So we're really seeing the power of this technology, the open API technology, in terms of elevating and fast tracking the digitalization in the financial services industry. And we're also excited in terms of how the digital banks will be coming up with very creative and innovative products and services that can also complement those that are being offered by traditional banks. So, with that, again, looking forward to the discussions this morning. Thank you very much.
Thank you for that, Ms. Hao. Our next speaker is Zdeněk Jankovsky. Mr. Jankovsky worked as an actuarial and insurance consultant and financial services specialist in Deloitte before joining the PPF Group, an international investment group, in 2008, and Home Credit Philippines, an international non-bank financial institution of which PPF is a major shareholder, in 2014. He is the executive director and corporate treasurer of Home Credit Philippines and also a member of the Rotary Club of the Manila and chairman of Heart for Little Angels. With almost 7 years of experience in the country, he now sees the Philippines as his second home and is committed to working his best to help make the vision of offering safe, affordable, and accessible credit a reality to every Filipino. Good morning, Mr. Z. Would you like to share your opening statement?
Good morning, everyone. Thanks for having me, and thanks for the opportunity to share Home Credit vision on the fintech development throughout the pandemic and beyond. And let me start, if we can flash my presentation with a little bit update about that or information about it, what Home Credit does for those who might not be familiar with Home Credit. So next slide, please. Home Credit was set up in the Philippines at the end of 2013, and in a little over 8 years, we have served more than 8 million Filipinos nationwide, and we were able to provide to many of them their first credit experience with a regulated entity. Next slide, please. This slide basically represents what I would refer to Simon Sinek Golden Circle. So I start with that what is in the heart of our business, and that is why we are doing this business, and it is that we are empowering every Filipino to be financially capable. How we are doing it is by extended different credit solutions, and we can split it into two types of the credit solutions, which are the acquisition loans, the loans where the customer get in touch with us for the first time, and then the loans that are and services that we provide for the repeated customers. And on the outer circle, then that is what we do. So for those who don't know what Home Credit does, is that we start with providing the point of sale financing, and I will talk a little bit later about the scale of the business, which means basically in the mall financing. Then for the customer who pay well, we provide them with the cash loans. We are a credit card issuer registered with BSP since 2018, and then we have some add-on services like the virtual limit for shopping and different value-added services. Next slide, please. To understand what is the footprint of Home Credit that we built here in nearly 9 years, we are no longer really starting challenger on the market. We became, I would say, even incumbent on the market with presence in over 10,000 point of sales. We expanded during pandemic our online presence, and these days we have about 2 million monthly active users of our mobile app. And we are partnering with all important or with majority of the important players when it comes to the distribution of the consumer durables. So you can see that all the major brands and all the major retailers are working with us. Next slide, please. Home Credit phase these days is beyond our 8,000 sales agents around the mall is our mobile app. And the mobile app is a powerful solution to improvement of the services and making things digitized. So our customers can do the QR shopping, they can do the bills payment, they can avail for a lot of different types of the discounts. They can get a good deals using our app, and then they can do all the servicing of their loans with us. Next slide, please. To see the scale of our business, I think it's good to look on this slide. So then you can see that in this 8 years, we have this disbursed loan for nearly 180 billion pesos. We were able to recover after the pandemic in the year 2021 to the size of the business that is nearly the pre-pandemic level, so more than 40 billion in the disbursed loans. And this year we are on a quick track to exceed our best year ever, which was 2019. Next slide, please. And Home Credit is not only assisting shopping, it is a company that has a big social impact. So as I mentioned earlier, we have served more than 8 million customers, but that a lot of them got their first credit experience with us. We are a company that is providing the financial services a lot to women. So I think this is important factor. So we are enabler for the gender equality. With the innovation that we bring with servicing our customers in a digital way, it has a big impact also on the amount of paper that we print. And I would say that since we launched our mobile app, we saved more than 10,000 trees. And 10,000 trees, I think, is already an interesting impact for our country that really needs trees. So then we can help the nature. We are serving a lot of unbanked and underbanked, and it's nearly 30% of our customers is below 30 years. So these customers are very hard to get approached to any credit. And beyond that, we have provided a lot of CSR activities, training when it comes to the financial literacy to more than 25,000 households. Next slide, please. This is the last slide of my presentation, and I would just mention that the major banking groups that are present in the Philippines recognize Home Credit impact for the financial inclusion and social financing, and we have made some financing deals that reflects that, and I'm happy that Deutsche Bank and Citi agreed on providing us with the funding. That is a little bit even challenging us to be able to prove that we are meeting all the KPIs that these major financing partners require, and we are having positive impact on the social financing in the country. So that would be intro from me, and I'm looking forward for the discussion.
Thank you for that, Mr. Z. Our third speaker is Mr. Paulo Azola. Mr. Azola is the Chief Strategy Officer of PayMaya Philippines, the financial technology arm of Voyager Innovations, the leading technology company in the Philippines. With Voyager's digital banking arm, Maya Bank, PayMaya is building the country's all-in-one money platform, Maya. He leads PayMaya in forging strategic global financial and operational partnerships, and previously served as its Chief Operating Officer and Managing Director, helping grow the company from its inception to its position as a digital financial services leader in the Philippines. Good morning, Mr. Azola.
Hi, magandang umaga, and it's good to see familiar faces, Jovi, Zdenek. I'll talk a little bit about where we are today in the financial technology landscape in the context of the global situation. So we've seen a macro backdrop over the last 6 months that has changed dramatically compared to last year. Last year, the central bank funded growth that we had seen in the second half of 2020 and the first 9-10 months of 2021 came to a halt, and we've seen some really good companies, the likes of Shopify and Square and Netflix and so on, drop in share price, sometimes 70, 80, 90%. We've also seen that in companies that are not just US companies, but also Southeast Asian companies. We saw some of the Southeast Asian darlings like Sea or Garena, as it used to be called, and Grab, some of the public comparables in the market, drop also around 80% from their highs. So the macro backdrop globally has been quite tough. I think if you look at the Philippine context and if you look at fintech specifically, it's a completely different picture. In the Philippine context, we've had a first quarter of growth where We had 8.3% GDP growth. Tourism is starting to come back. Tourism is anywhere between 13 and 22%, depending which number you look at, of GDP. So tourism coming back is very good, not just for tourism itself, but also for the country as a whole. And fintech specifically, I think, has received a lot of attention in the Philippines. We've seen some very sizable funding rounds, not just from Maya, Voyager, our company, but also from other companies out there. And the numbers that we heard earlier from Jovi, actually from Pat, of 50% of transactions by the end of next year being cashless, and 70% of Filipinos having a financial account by the end of next year, I think show a very large or very strong momentum in the right direction of people adopting new financial services, people coming into the formal financial system. I remember in 2014, when I first stepped foot in the Philippines, those numbers were 1% cashless instead of 50%, and about probably 25% banked compared to the 70%. So the momentum definitely is on the side of more financial inclusion, more financial services being provided by digital fintech companies. And part of that is due to the interoperability that we've seen of banks and non-banks in the new framework provided by the BSP and the industry under the National Retail Payment System, or NRPS. People today will pick their bank and their financial services provider not based on how many branches they have I'm locked into that bank because of other reasons, but they'll pick it based on functionality, service experience, and I think that's a very good development. The other thing that we're seeing, and I think this is, I was reading an article in Forbes just yesterday that was talking about how the financial technology or neobanks out there are not all created equal. Those that have scale and monetization will be able to succeed and thrive, and there's going to be a consolidation towards the very good scalable companies. And those that don't have that scalability will obviously fall behind and close down. And I think that's actually good, because the regulators would be able to focus on less companies they need to regulate. Customers will have the choice of the best companies out there to put their money with and to transact with. And inevitably, I think consolidation will happen towards the best companies out there. And we hope, obviously, Maya is going to be one of those best companies out there. So I'm excited about the discussion. I'll hand it back to you, Pat.
Thank you for that opening statement, Mr. Azola. All the opening remarks were very encouraging. All right. Welcome again, everyone, to this panel discussion. How about we start this conversation with a question about the current payment infrastructure in the country. Ms. Howe, what is the payment infrastructure right now in the Philippines, and how is fintech reshaping it?
Yeah, Pat. So to start off the discussion, I think, as Paolo mentioned earlier, his experience when he first came here in the Philippines, we've come a long way, actually, especially in terms of the infrastructure when it comes to the payment systems in the country. For one, most people are now comfortable in using QR codes for their payments. Before, I remember when it was first introduced in our own office, there's a lot of hesitation in terms of using the QR code when doing payment transaction. But now it's like second nature to them, to most people. So as I mentioned earlier, the BSP is really looking at these types of technologies as opportunities in terms of improving the efficiency of the payment systems in the country. And also, even our own PhilPass system. So the BSP is also into enhancing the PhilPass system. We call it the PhilPass Plus. So it's undergoing the necessary enhancements so as to facilitate, more volumes of transaction, also incorporating tons of security features, because we should also be very conscious of the cybersecurity side of things, especially when as of now we're really transitioning into digital services. So the other side of the coin there, when going digital, is really on cybersecurity concerns. So a lot of things um, will threaten the security of payment services, but the more important thing here, and we always underscore this to our supervised institutions, that cybersecurity, I mean, they should go beyond thinking about cybersecurity, because um, as many of the security professionals know, that um, there's really no 100% security. Even if you implement all the controls and everything is really in place, there's no 100% guarantee that you will not be breached. Because the reality is, if something is online, it is really vulnerable to cyber attacks or cyber threats. So what's really important, and we keep on underscoring this, is the importance of cyber resilience. So, BSFIs or BSP supervised financial institutions are really expected, and they are required to have in place their plans and programs that would enable them to um, as fast as possible, for them to be able to resume their operations and protect the customer data and their company data, in case or in times when they experience these types of cyber attacks, whether it be a minor breach or a major breach in their system. So those are actually some of the latest in terms of the developments in our payment systems in the country.
Talking more about cyber resilience, in your opinion, do you think that MSMEs and individuals, Filipinos, are getting better at being cyber resilient and spotting
Um,
scams? Yeah.
yeah, I'm glad you mentioned that, Pat. It's really comforting, so to speak, to be able to see the progress of the level of financial literacy and now digital financial literacy of our consumers. So, in the early days of these online transactions, there are a lot of phishing campaigns that we've seen, and it actually doubled or even tripled during the pandemic as we really shifted all our financial transactions online. But given the concerted efforts, not only by the BSP but of course by our supervised institutions like PayMaya, Maya Bank, and Home Credit, and other institutions of the BSP, in terms of coming up with customized and really very easy to understand consumer protection and consumer awareness programs, especially in terms of consumer awareness on using online channels. It's really great to see that a lot of people are now able to easily spot scams, and they double think, and they really pause and try to think and understand if something is really a scam or a legitimate banking app. So a lot of banks are sharing with us also, not only banks but also other non-bank financial institutions. They're saying that um, it's a good problem to have, that many of their customers are calling them up and trying to confirm whether something is legitimate or not. But it goes to show that people are really learning, and they're really learning fast, um, and it's really a very fruitful engagement with our supervised institutions and also our international partners. So in terms of coming up with really good and easy to understand consumer awareness program.
Thank you for that, Miss Howe. That's a positive development.
Yes.
Now, yeah. Now let me share some numbers from the Philippines FinTech report. which said that 27% of the fintech space in the Philippines is composed of the lending sector. This is followed by the payment sector at 20% and e-wallets at 13%. Mr. Yankovsky, what do you think accounts for the lending sector's popularity? And have you seen any increase in the use of home credit services since this pandemic?
Well, I think it's important then to understand what these numbers mean. And 27% might be the companies that are involved or like licensed to provide any lending services. But then another perspective is really how much of the lending is happening on the market using fintech compared to the incumbents. And I think we are more like facing a challenge when it comes to impact of the lending fintechs compared to the payment fintechs. If we see Paymaya or Gcash and their importance when it comes to the sending money and the way how these companies are disrupting all the remittance business and all the remittance companies, that's very strong. When it comes to the lending business, I think is much more challenging than it looks from this report and the numbers of the financing companies or companies that are registered that are how to provide lending, because especially the pandemic was very challenging when it comes to the quality of credit, and a lot of credit institutions that were trying to provide lending online struggled and were not able to get the money back. It is what I always refer to, very important to be able to distribute the money using the digital services. But this is not a company that is giving away the money for free. The company needs to be able to get the money back. And I would say that there is a lot of work ahead of us and ahead of the incoming challengers, the digital banks, that they should be able to more disrupt incumbents when it comes to the lending and grow the business. And I think we will have some time to discuss a little bit with Jovi and Paolo also about the open finance, because I think there is an opportunity to work on making it easier for the digital banks to be able to challenge the incumbents. And I think they need some new rivals. And the growth of the business, I was showing the numbers of home credit, and I think it's quite good delivery from our side. When I look on the others, I don't see that big numbers.
All right. I wonder, how was home credit able to deal with the challenge of the quality of lending? Because like you said, that you need to distribute the money, but it's not free money. You need to also get it back. How was home credit able to handle that?
Well, like I think the first thing is to do the business in a fair way. The lending to the masses has the inherent risks, and it is also about the strengths of the shareholder. So when you look on the development of the crisis, we were able to have enough capital to be able to absorb the risk. We were able to bring the funding to be able to secure sufficient liquidity, and then to come back in 2021 even stronger and start to deliver on the results. It is really about having the proper fundamentals, and as mentioned before by Jovi, you need to have proper infrastructure. Just all this cyber security risk. Just we have proper disaster recovery centers and all of these things in place. What is a challenge for smaller companies, and this needs to be properly followed. So we are in the business for 25 years. We are doing it around the world. We are doing it in Eastern Europe. We are doing it around Asia. And we learned from our mistakes from the previous crisis, from the Russian economic crisis in 2013. And we were able to very swiftly respond to the market. But yes, there was a lot of customers that were struggling to be able to bring rice on the table during the pandemic. Then they were availing for the payment holidays, and a lot of risk costs was much higher in 2020 than in other years, and our risk costs were double in 2020 compared to the business as usual.
All right. Interesting. Thank you for that, Mr. Z. Moving on to digital banks, Mr. Azola. Since Maya Bank was launched earlier this year, How are Filipino consumers receiving Maya Bank's services and products? For instance, I know that the Maya app is offering a 6% interest rate in savings accounts. Are a lot of Filipinos taking advantage of that?
Yeah, so I think just to answer the question directly, the take-up has been even beyond our very aggressive projections. So both in terms of the amount that has been deposited with the bank, as well as in terms of the numbers of consumers that have deposited money with us, and also in terms of the numbers of consumers that have gotten loans afterwards from us, because attracting consumer deposits at 6% when you have a strong brand name already in the market like that of Maya is the easy part. I think the more difficult part is then making informed credit decisions and lending to the right people and making sure that you grow your loan book while not blowing out your non-performing loans. So that obviously is the part that is more challenging. We're very lucky because we have several different inputs that are proprietary to us, as well as other inputs that are available in the market. For example, the proprietary inputs can be the information we already have on our customers, the PayMaya customers that have been with us for up to 7 years at this point. At the same time, some of the telco data and inputs that we receive from the telcos, including our own parent company. And at the same time, the industry data, like the kind of the credit bureau information, the financial scores from outside, and so on. So the take-up has been nothing short of staggering or very strong, and we're very excited to see how it plays out for the rest of the year. I would also mention that aside from the banking piece, we've also, or aside from the kind of take-up at the beginning, one of the big items for us was how fast can we get to market, number one, and then number two, how fast can we get to some of the milestones that we had for ourselves, that we set for ourselves. In terms of the getting to market, I think we only received, or we were only in the news in September last year as receiving our approval to operate a digital bank from the central bank, and already by the end of March, by March 31st, we had an actual product in market in beta phase. By the end of April, we were available to the broader public. By the end of May, we started our full go-to-market. I think if you compare that to other digital banks out there, that was a much faster delivery. And when it comes to also number of deposits, a number of users, the comparison stacks very favorably compared to other digital banks out there. So we're quite proud of what we've achieved so far, but this is just, again, the beginning. There's a lot more to be achieved going forward.
Thank you for that, Mr. Azola. 8 months to get to market sounds pretty fast. Talking about inclusion, based on your experience so far, do you think that the fintech sector in the Philippines is indeed successfully onboarding the types of customers that traditional banks usually reject?
I think there's a slightly more nuanced answer to that question. In the Philippines, you don't just have banked people and unbanked people. There's a massive segment in between, which is the underbanked portion of the population. These are people who might have a bank account, but all they can do with that bank account is take money out of an ATM in cash, or that's basically their common behavior. So I'd say if you look at the percentages, and I might be off by a few percentage points here or there, but those who can actually get a credit card, a loan, a mortgage, those who are a savings account, those who are fully banked in the Philippines are not more than 5% of the population. You then have about another 20-25% of people who have current accounts or checking accounts with very little functionality other than that. If they want to get a credit card or a loan, forget about it. At least with the banks themselves, they can obviously go to other providers like Home Credit, and that's exactly the part of the market that Home Credit goes after. And then aside from that, you also have the people who are fully unbanked, who have never been part of the banking system. So it's a lot more nuanced than just bringing the unbanked people into the banking system. I think a lot of the customers that we served are customers who might have a bank account but don't have that much functionality from the bank. And that's on the consumer side. If you look at the SME side, the picture is very similar. The BSP sets targets every year for how much needs to be lent to SMEs across the country. And those targets get underperformed every single year. You only get to about 10 or 15% of those targets that actually get lent out to SMEs, to MSMEs in the Philippines. And that's not to say that the banks are doing a bad job of giving loans out to MSMEs. It's just that the banks might not have the right level of information about those MSMEs to be able to lend to them. So they cannot make informed credit decisions about those MSMEs. So what we've seen is that with the hundreds of thousands of MSMEs that we've been working with over the last few years as remittance centers, as bill payment centers, as payment channels for us, we've seen that we have a lot of information about where they are, who they're owned by, what their cash flows look like, and therefore making a credit decision that is informed and underwriting a credit decision for them is a lot easier for us than it is for any of the incumbent banks.
All right. What I'm hearing is that if you don't have that much information, you don't have that much documentation, it's going to be harder to bank you. It's going to be harder to grant you a loan. So this next question is addressed to anyone. The government currently has a national ID system. When this becomes fully functional, will it help credit companies and digital banks onboard people faster and more effectively? Will it help them grant loans more frequently? What do you think?
Yeah, I can take the initial part of that. I think there are three main macro factors aside from individual companies like Maya or Home Credit, being good at lending to people or being good at making underwriting decisions to lend to people and to businesses. There are also macro factors that are available to everyone that are constantly improving in a country like the Philippines that will enable better lending and therefore cheaper lending for the right people out there and the right businesses out there. And those three main factors to me are, number one, the identification of people, which is what you just mentioned, and definitely being able to reliably identify more Filipinos will mean that we can actually more reliably lend to those Filipinos and to make more tailored decisions about them. The second one is credit bureaus working more closely together and banks working more closely together to identify the bad behavior in the market and make decisions like not repaying a loan have accountability behind it or consequences behind it, which today is most likely not the case. And then the third, the kind of like the third big factor behind it is obviously in the individual growth of the companies themselves. I remember and also, sorry, there's one more factor, which is the SIM registration piece, something that was rejected in the by the president, by the outgoing president just a month ago. But I think with certain tweaks, the kind of like the houses look like they are confident that it might be passed in the future. So between SIM registration, credit bureaus working together better, and national ID system or the identification of people being more reliable, you have a lot more information for companies to be able to reliably lend to people and to their businesses. I'd say I remember in 2015 I was in Kenya visiting M-Pesa, and M-Pesa is one of the darlings of the initial fintech boom 15 years ago. One of the reasons why they pointed to how they were able to have such a fast boom and to be able to reliably lend to people was precisely that Kenya came up with a national ID system that was ubiquitous in the late 2000s, and it enabled anyone to look up the name Paolo Azzola in a database or system, and that name would come up with whether that person there is actually has a national ID in the country, whether they've ever defaulted on a loan, and so on. And that obviously enables companies like Home Credit, Maya, and several others to more reliably lend to a single individual, and therefore to lend on a more tailored and therefore cheaper basis to individuals and to companies.
Thank you for that, Mr. Azzola. Anyone else?
Yeah, maybe if I can follow up on that. With the national ID, it starts, and it's part of the infrastructure. But the main thing is really to be able to recognize the customer. And we got ahead of the time with the facial recognition softwares and all of this. So just the national ID will help a little bit. But what really is important to get some data connected with this national ID. And as Paolo was mentioning, credit bureaus, the credit bureaus work for the customers who already got some loan from a regulated lender. And we are talking about extending financing to those who are not regulated yet, or didn't get a loan like this. So I think that is important to bring in game other data that will help the lenders to make qualified decisions. And as Joey was mentioning, she's in charge or just working with this open finance framework. And there is a way how there is a plan how to make the banks to open the data so then we can work with the data of the other market players. But for us as a lender, what would really help is if the government institutions that have data can share the data. So to include in the open finance framework SSS, GSIS, or BIR that have the data about the customers, because that can really provide to us information whether the customer is employed and whether he is paying his SSS, and that can be a basis for the decision. Well, if you have a government ID that is referred to a person that we can identify with the facial recognition software, and we can only ask to the credit bureau about that customer, and that customer never got any loan, it is not going to help to us to make a credit decision. So I think it's really focus on the things that can provide additional information. And Jovi, I think it would be good if the team can look into talking to SSS, because that's the institution that has a lot of data that should help and should help to the challengers. The digital banks that are coming to the market, they don't have PayMaya data. They do not have PLDT data. And if they can touch the SSS data, they can make much faster steps. So that would be my ask to you, because you are working in this area. So maybe if you can comment about that.
Yeah,
How?
duly noted on that, Zdenek. Actually, we're at the early stage of the open finance journey, and it's really um, a good time for us in terms of getting those inputs, especially from the industry. And just to comment back on what Patricia has raised earlier, I agree with Paolo and Zdenek in terms of having a national ID system. That's definitely a good thing to have. But I think the challenge still remains in terms of having products, financial products and services that are really fit for purpose. Meaning to say, it's easy to onboard people, but after onboarding, will they really be able to use those products and services? There should be something that would if I may use the word, have the product stick to the customer's day-to-day activity, especially in their financial experience. But we also need to have programs that would address a deeper underlying concern, which is um, more pointing towards financial literacy. Because I think at this point, we have to really empower the Filipino people, especially we can um, take that into account in our education programs or our school curriculum in terms of really embedding that appreciation and understanding for financial literacy. Because at the end of the day, it would depend on the behavior, the preference of the consumers. Um, um, in defining the success of having a digital financial service here in the country. Um, Even if we have all the technologies or all the infrastructure in place, but there's really no deep understanding or appreciation from the customers that they need to use or have preference towards formal financial systems over those informal segments, it would still be a challenge for us as a nation. So I think this should be really looked into at a more holistic and um, a higher level of consideration in terms of having all these initiatives and programs in place. We really have to go back and look at the what the customer needs, what the public needs. So yeah, that's it. And duly noted on that, on your comments for the open finance, Zdenek. And we'd also love to touch base with you and Paolo and other non-bank players in terms of your inputs on open finance.
Yeah, if I maybe can a little bit follow up on this, if uh, and happy to help, and just we are all also part of the Fintech Alliance Philippines. I'm a trustee of the organization, and just in your team you have Idat Yongson, so I think the team is definitely gonna be supportive, and you can call me anytime. But just to provide additional feedback about the providing the relevant products to the customers, and I would split it into two parts. One is those totally unbanked, and there I must say that I super appreciate the good work that the BSP did on setting up of the rate cap when it comes to the unbanked, so then we really get out of the regulated business those who are really doing the usury practices and inappropriate business practices. And I think it was a long process which ended up with a very good outcome. But then we have another thing, and then I will a little bit talk on behalf of the digital banks that didn't start yet. And just as Paulo mentioned, to get for 6% deposits is easy, but then you need to get the assets. And I think we have a little bit challenge for the credit card industry, because for the digital banks, the natural product to provide to the public would be the credit cards. And with the rate cap that is in place, the rate cap really is limiting the level of the credit cards that can be provided only to the best of the best customers, to the customers where the banks have already a lot of experience with them. But like the incoming digital banks cannot simply enter to the business where they would be kept at 2% monthly rate, which basically disqualifies this whole population. As Paulo was mentioning correctly, it's like 5% of the customers in the Philippines can get a credit card. And as long as the rate cap will be at 2% per month, the new customers will not get the credit card, because the risk, especially for the customers that you don't know, is too high, and you just cannot get into the business with having the losses. And then it will be challenging to how to get the assets for the banks and how to do the lending. So that would be something for the BSP. Hopefully, can revisit during the next review. And I'm not saying just to increase it to the roof, but like just before the pandemic, the rates were up to 4%, which I think would be already enough for the incoming digital banks to be able to start to challenge the incumbents. Because at this point in time, the regulation is just helping the big banks that already have the information about their customers, and it's not helping the new customers.
Wow, that's food for thought, Mr. Z. Wow. Thank you for sharing that. Okay. Ms. Howe mentioned digital financial literacy rather and consumer behavior. And I'm glad that you mentioned that, because I find it remarkable that amid this rapid digitalization, bank consumers are still struggling with the basics of how to budget, how to save, and how to pay their loans and bills. Is the fintech sector also helping their consumers in that regard? Anyone? Is the fintech sector helping their consumers learn how to manage their money?
Well, I just say and I will be quick so then I give space to Paolo. That before the pandemic, we were running a big program 123, and we were going to the barangays and teaching the budgeting, and it's part of the education for all the customers that are getting a loan from us, that the sales agents are educating them on the financial literacy. And I think it's the responsibility of the industry to educate the customers. And as we are going digital, we also have some digital activities in this. But back to you, Paolo, so you also can share your stories.
Of course, yeah. I think one of the big achievements that Jovi was mentioning earlier in her initial statement was the education and financial literacy of customers is actually of people in the Philippines has actually increased a lot over the last few years, and that's true of how to use a mobile banking app or how to use a digital payments app, how to make a payment transfer, how to use a QR code, where to get the best loan out there. I think there's a lot of progress that has been made in the industry, and it's because players like ourselves and many others in the industry have spent a lot of money, resources, time to educate customers. One of the big elements that was mentioned earlier by Jovi was also around fraud, educating customers that if somebody calls you and asks for your OTP, doesn't matter who they say they are, you're not supposed to give it to them, or your password or any kind of other information. And people are getting smarter around. There's obviously a lot of work to still be done, but people are getting much smarter. And when we introduce new products and services to the market, one of the key things that we do is we try and give it an educational angle rather than a sales angle. So one of the big examples that I can think of very recently was when we launched our investment platform, and the initial instance of that investment platform was around cryptocurrencies, buying and selling the top cryptocurrencies around, made available on the Maya app. The take-up has been nothing short of staggering. We've seen users in the hundreds of thousands use our platform on cryptocurrencies, and I'm sure soon we'll come out with a report on how many people have used it and what kind of usage we've seen there. But the numbers have been staggering. And the approach that we took there wasn't, buy a, excuse my French, but the SHIT coin, as they're called in the market, and try and make 100% return in a day. The angle that we took was, learn about cryptocurrencies and pick the right ones. It's not necessarily about making a buck today and tomorrow. It's about long-term investment and understanding the industry better. And our platform has a lot of educational materials around crypto, not just, here's a coin, buy it. So I think that's true not just of Maya, by the way. I'm patting myself on the back here, but it really is the entire industry. Even our competitors are doing a really good job of trying to educate customers on the do's and don'ts around financial services, and most importantly, how to manage their money.
I'm very glad to hear that. I'd like to shift the topic a little bit and talk about the talent within the fintech sector, because I talk to a lot of company founders and executives because of my work. And one of the recurring themes that I pick up in our conversations is the talent shortage. There seems to be a talent shortage across industries and also in the fintech sector. So my question to anyone can take this up. My question is, how can the Philippines upskill Filipinos in order for them to meaningfully participate in the digital economy, whether as consumers or as workers within it?
I'll probably start.
Okay.
As financial regulators, we share the same challenge with the industry in terms of, especially the skill sets required when you supervise fintechs and all the other evolving technologies in the digital landscape. So we have virtual assets, we have decentralized finance, and now all these talks about metaverse and all those stuffs.
Mhm.
So as regulators, we have an added challenge actually in terms of not just understanding all these technologies and all these um, uh, evolving threat landscape. The added challenge for us is how do we compete with the private sector in terms of um, the salary package, so to speak. But kidding aside, how do we address also the needs of our supervisors in terms of having that deeper understanding and being able to connect the dots in terms of looking at the risks on a per per technology perspective, and connecting that and how it translates to the overall um, threat or risks to the financial stability um, in our country. So that's one of the challenges. And what we're doing now is really partnering with international partners as well as other fellow regulators in other jurisdictions in trying to provide the necessary skills and uh, knowledge, basic knowledge in terms of all these technologies. And locally, here in the Philippines, we have what we call the Financial Sector Forum. So this involves the four financial regulators in the country. So it includes the BSP, the SEC, the Insurance Commission, the IEC, and the PTIC. So through this forum, we have periodic discussions as to the approach that we should undertake as a group, so as to have that more progressive and I think more practicable approach in terms of managing all these technologies that we have right now. Because for some business models, it really cuts across the threats and the risks and all the other considerations cuts across all these four financial regulators. So we have to sit together as one team in terms of defining how do we approach this particular business model or this particular technology, and how do we calibrate our policies and our regulatory approach. So those are just some of the initiatives that we have. So ongoing engagements with partners. And we're actually also glad that, for most of our supervised institutions, they're really very helpful as well in terms of engaging with us and sharing their on the ground experience in terms of these technologies. And from those collaborative meetings and engagements with our supervised institutions, we also learn from those experiences that they share with us. So maybe Paolo or Zdenek can also add to that.
Yeah, but I'll add to it. I think we're very lucky because we're able to attract a lot of really high quality talent, both locally and sometimes internationally. And we've actually had, I think, back and forth of talent between Home Credit and Maya and the central bank. So there's also people who go from one way to the other, and it's obviously helpful for the industry. It creates more well-rounded people and employees. I'd say there are two different levels of education that need to be worked on. The first one is the broader education that gets a human being to where they need to be when they exit college. And I think there's a lot of work to be done, not just in the Philippines, but in many countries, including my own home country, Italy. There's still a lot of work to be done, and there's a massive gap between some countries and other countries. Obviously, the US, Singapore, the UK tend to be the ones that people gravitate towards when they need to find one of the better colleges. And I don't see why the Philippines wouldn't be at some point a country that attracts people from that perspective. It's a multi-decade program that needs to be run in improving the education from all the way from K to 12 and into universities. But when it comes to fintech specifically and finance specifically, I think a lot of it becomes less so about how people learn and what kind of what they've learned in university, and a lot more about have we created successful startups and a successful environment in the Philippines where people can then go to a company and learn how to do a particular job. I guarantee you that people come into Maya as an employee that is maybe a 6 or a 7, and they leave Maya as an 8 or a 9. And that's something we can be very proud of. Of course, it means that a lot of people come to us and poach our talent. But it does mean that the more Mayas there are out there and the more Home Credits and other successful companies out there, the more people have an opportunity to find a company where they can be groomed into, or where they can be developed into a successful employee and and have a successful career. So a lot of it will be, if the more great companies we bring out in the Philippines, the more people can learn fintech and financial services more generally.
Thank you for that, Mr. Azola. If people come in at 6 and exit an 8, then that means it's really enabling environment for self-growth. And that's all the time we have for our panel discussion. Before we conclude, may we ask our panelists to share their key takeaway from this conversation. Maybe we can start with Mr. Azola, then Mr. Yankowski, and then Ms. Howe.
Yeah, I think, I mean, I'll go back to my initial preamble, which is, I think generally the world today is in a worse spot than it was 6 months ago. Capital markets are doing pretty poorly globally. Tech companies are suffering a lot. And the inflation, money printing issue that we have globally is something that we should be worried about globally. The picture in the Philippines and the picture for fintech in the Philippines is completely different. There is momentum in terms of growth. The first quarter in this country, as I mentioned, has shown that growth is here and it will continue. The resumption of tourism will bring a lot of money back into the country. And I do think that fintech is primed to break out. We've seen that over the last 2 or 3 years. A lot more foreign money has come to the Philippines as investment into fintech companies, and that will only continue and only grow. So we're very lucky to be in this industry and in this particular country. There's no better place to be.
That sounds awesome. Mr. Yankowski?
I think I will continue where Paolo finished. I think the Philippines and our industry is in exceptionally good place compared to that where is the world, rest of the world moving. And I also want to say kudos to the incoming BSP governor for the pressure on the moving with the rate caps, because Fed is moving with the rate caps. Then I think it's done in a smart way. We don't need to panic. The problem is now for the US that the dollar is getting too expensive, and it is a not problem in the Philippines. So I think we should be happy that we are where we are, but we need to work hard to make sure that we are able to use this momentum. And I think we are looking for the incoming challengers to become the rivals of Paymayas and Home Credit, so then we can serve the Filipinos even better.
Thank you very much, Mr. Z. Yes, we do hope that the next administration can further this strong momentum and take advantage of it. Ms. Howe?
Yeah, so in closing, I'll just reiterate the commitment of the BSP, especially when it comes to our approach to fintech. And our commitment will continue to provide enabling regulatory framework through, of course, the issuance of our risk-based and risk-based regulations and policies. And we will also continue with the collaborative engagements with the industry and also the other key stakeholders in the financial services industry. And again, just to close this statement, I would again want to share that the BSP remains firm in terms of um, coming up and enforcing, sorry, not enforcing, but sharing our consumer awareness program together with the industry. We'll work closely with the industry in terms of delivering customer specific awareness programs so that we can all benefit from all the advantages that these financial technologies are offering to the market. So that's it. Thank you.
And with that, I'd like to profusely thank our panelists for today, Mr. Azola, Mr. Yankowski, and Ms. Howe. Many thanks also to our partner organizations, the British Chamber of Commerce of the Philippines, the European Chamber of Commerce of the Philippines, the Makati Business Club, the Management Association of the Philippines, and the Philippine Chamber of Commerce and Industry. Thank you too to Maya, who sponsored this event. Last but not the least, to everyone who joined us today, 1,000 things. Again, this is Patricia Mirasol, and this has been Business World Insights. Make sure to follow Business World's social media pages and be updated on our next projects. Have a great rest of the week.